Moving Iron Podcast is proud to be part of the Global Ag Network. The network is going live soon, so check out globalagnetwork.com for more details and updates. Now on to the show.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Tax Moves with Glen Birnbaum. Glen, how you doing, bud?
Hey, good, GC. It's almost end of February, so.
Yeah, and I'm sure that you're up to your ears in tax stuff going on right now.
Yeah, I don't know if you can see my head exploding or anything, but there's a lot of information that we're dealing with. So.
Yeah, I can imagine there's a lot of stuff going on right now. We've talked about a lot of stuff, kind of back and forth over this last couple of months here, and most of it revolving around the 199 grain glitch and some other kind of uncharted waters, I guess. They opened up some new regulations and stuff, but have yet to really clarify what that looks like. So before we got started, you were talking about grain trailers, different kind of stock trailers, those kind of things. If you're a dealer, that kind of stuff, and how that might affect your floor plan.
Yeah, so last podcast we spent quite a bit of time on these new interest limitation rules, which is the first time really for kind of Main Street America that we've had to, maybe we can't deduct all of our interest. And this is one of the biggest revenue raisers in the new tax code. And generally you're limited to 30% of your EBITDA, your earnings before interest, taxes, depreciation, and amortization. Now there's special rules if you're under 25 million in revenues, which obviously covers a lot of people. You may not have to worry about this, but there's even exceptions to that we've talked about. But there's a public hearing next week. So the proposed regulations on this were issued late November, and there's a hearing next week, starts Wednesday, where people are going to be commenting on these proposed regulations. These are the refinements, kind of the details. This was over 450 pages, if you might remember, Casey. So this public hearing next week, and so comment letters are coming in. So people don't necessarily have to come there and testify, right? You write in a comment letter, and then if you want to testify, you can say, hey, here's what I'd like to testify on. There's only been a little over 30 comment letters posted, which is kind of surprising. There was over 330 comment letters on the 199A regulations. But I think part of this is just, we're in the middle of tax season here, so there hasn't been as much time maybe to write letters. But one letter I wanted to point out was just issued, I think, the last couple of days, and it's by a CPA firm that deals with a lot of auto dealers, and because this floor plan interest rule, we talked about that last time. And they're pointing out the difference between, if I'm a medium truck dealer, that a semi is considered a motor vehicle, and so you can deduct all of your floor plan financing interest related to a semi. Your interest that you're paying, right, while you're holding that inventory, either for sale or lease. But if it's a trailer, right, which I think, generally speaking, there's going to be a trailer attached to about any semi. If it's a trailer, the trailer doesn't actually fit the definition of a motor vehicle. So these dealerships, would have to then bifurcate this and do some complex calculations because they can't. A semi and a trailer aren't the same thing. But this letter pointed out that if you're a farm equipment dealer, such as yourself, and you're selling a trailer, they use a livestock trailer as an example, but I think a grain trailer would work as well, that you as a farm equipment dealer would be able to consider that part of farm equipment, because farm equipment is granted a special exception. So this is, just an indication of how specific, if it matters to you, right, you look at it really hard. And so I would hope that they're going to say, well, you know what, a trailer is basically always attached to a semi. So we're going to make a semi and a trailer considered a motor vehicle. But right now, people are looking at filing tax returns. These rules are in effect for 2018 tax year. The public hearing is next week. The final regulations will not be out before April 15th, I'm pretty sure. So basically, people might have to, maybe they'll extend their return. I'm talking, these big dealerships and things. Again, for most farmers, this isn't going to come into play because you're not going to be, generally speaking, over 25 million in revenues. But it just gives you an idea of how, it's hard to craft law, right, that makes sense in all cases. And so this is just one of the things that people are dealing with, semis versus a trailer.
Have you ever seen any precedent before where it's something like this scenario we're talking about here, where the IRS was saying, nope, we're going to leave it the way it is, or after looking at it, we do realize that you can't have one without the other type of thing? Is there a precedent that shows that, or is that a pretty common thing?
It's, it depends on, sometimes the administration, but for example, one of the big things with 199A was that, if you remember, brothers and sisters weren't considered family under the definition for this self-rental, and people are up in arms about that when the proposed regulations came out in August. Well, when the final regulations were released just last month, they changed that. So you would like to think that it would make sense, but sometimes part of the question is, when Congress was drafting this and they had their writers, helping them, Joint Committee on Taxation and things, what was their intention? When they developed the $1.5 trillion cost of this tax plan, right? However they did those calculations, did they kind of assume that trailers didn't count, or it kind of has to do with how they maybe did the math behind the scenes. So the Joint Committee on Taxation, which is really supposed to be like the people that really helped draft the bill, they came out with we've talked about this, it's called the Blue Book. It came out about a year after the law was passed, and it kind of described their rationale. And there, they do acknowledge that there would be some differences. One of the things they actually acknowledge on the interest rules is that, this is how crazy it gets, Casey. If you technically look at the Internal Revenue Code, just the actual law that was passed, you could view it that if you have any sort of floor plan financing interest whatsoever, you are not eligible for bonus depreciation. You might remember that we talked about that. Hey, if you want to be able to deduct your floor plan financing, then you can't take bonus depreciation on any sort of assets in your business. And so if you really look at the law, some people say, well, that's just an absolute fact that you have no choice but if you take floor plan financing interest 100%, then you are not eligible for bonus depreciation. Well, the Blue Book, which again is more the drafters of the bill, said they in there very clearly have several examples. I put this on Twitter probably about a month ago. They say, well, no, if you can pass this test, this 30% test, without doing this special adjustment, then you can take bonus depreciation and still be able to claim the interest in a certain situation. So it just shows you that, it gets it down to like intent and statutory construction, and people talk about these terms. But to answer your question, I would hope that they would think, a trailer is, you don't just buy semis, right? A trailer is part of it. I would think that they'll patch this, they'll fix this, and treat a trailer as part of a semi. But in the meantime, people are trying to file tax returns. There's deadlines. And what are we going to do? We have to estimate our tax paid, right? We have to pay an extension payment, and it's kind of a guessing game. So, but this hearing will be helpful because we'll see how many people are commenting on this, right? We'll see how many comment letters are out there. Again, there's very few letters actually right now, just over 30. Kind of surprising. So, I think you'll get a sense at the hearing, which is of how many people are really up in arms about this. But I'm hopeful that they will change it.
Yeah, that's a big deal, man. You start looking at all the different things. Especially when you're looking at just like you said, a semi dealer, a Kenworth dealer, Peterbilt dealer, somebody like that, and they're selling, van trailers and flatbed trailers and drop decks and stuff like that.
Yeah,
it's going to be a big deal. You can't really hook that on the back of a pickup and pull it around. You have to have a semi to do it.
Yeah, in theory, what this could mean, if you really think through it, if they say no, that's a motor vehicle is not a trailer. In theory, then there just would be less trailers on the lot if you think about it, right? Because if I purchase a trailer with credit and I can't deduct all the interest because it's not considered a motor vehicle, then I'm not going to purchase as many trailers to be on the lot because, it's costing me money. So in theory, that would be the ultimate consequence of this, is there'd be less trailers available, on the people's lots. So I think, people are going to wise up and say, well, we need to fix this.
Yeah. Well, good stuff as usual, Glenn, and make sure you guys reach out to your tax preparer about this stuff. There's a lot of little intricacies here that we need to brush up on and make sure that you got the right stuff. And Glenn is always out there to be contacted, Glenn. So if folks want to reach out to you and ask you a few questions, how would they do that?
Yeah, again, Keith, I'll just reiterate that, we're talking a lot of, we get into some details here, but we're talking generalities, right? This is not tax advice, right? It's really important to discuss your specific fact situation with your CPA, with your enrolled agent, your tax preparer. But yeah, if you, I'd be glad to take any questions, and it's best to call me here at the office at Heinold Bainworks. Our phone number is 309-694-4251. You can also follow me on Twitter at Glen Birnbaum is my handle.
All right. Well, good stuff as usual, Glenn, and we will catch you again next week, bud.
Okay. Thanks, Casey.
All right. Take care, Glenn.
Moving higher in the 21st century. Hard work